Ladies and gentlemen, Joshua Salvetti, welcome back to another lesson from HPT. And today I want to break down yet again another trade recap of a day that we took. It was yesterday, we were live on the market. And this day, right, I really want to break down because it is such a good example of how we use market structure on larger time frames to determine the conditions of the market. And then I want to show you guys, I want to really dive deep into the 2-minute time frame and how I use that to capitalize on a $4 move yesterday on the S&P 500, right? So the first thing we're going to do is whip out our 1-hour time frame, right? So before any day starts, I have to get the context, right? Trading is much like communication. It's much like storytelling, right? For you to truly understand the story, you got to have the context, right? And for us to get the context we need to determine whether it's going to be bullish or bearish day, right? We have to use the 1-hour time frame, right? So the market has been extremely volatile, right? Entering this market has been very hard to determine risk. And that's where that 2-minute comes in, and we're going to get to that later, right? So to develop the context, right, I just use market structure, right? I'm going to grab the lows from the previous days of the week, right? So this 53741 area was critical, right? So this was pretty much last week, Monday, Tuesday, Wednesday, Thursday, Friday, right? So you can see here, Friday and pre-market were breaking below the previous lows, right? So this is a classic break and retest, right? This is classic structure. So when I see something like this, for me to long the market, right, or to even consider longs and for any matter, I have to get above 538, right? Until we get above 538, I have to be bearish and play my moving averages down to downside targets, right? So let's figure out where downside targets are. Another way I do this is grab from the daily time frame, right? Your daily time frame, you guys know the pit numbers. I love the pit numbers, right? That's your previous day high, low, open, and closes. The 4 main critical levels on any candlestick, right? So we're day traders, right? We trade intraday. So these previous price targets from previous daily candles are our best friend. They're literally our main way to determine entries, exits, right? Even stop outs, right? And it gives you more context. Think about it. We got our supply zone right here that we're below in pre-market. So now I have to figure out where's price going to go if I want to short the market, right? So how do we do this? I take a little line right here and I find the next low of the candle, right? I have 53197. Another one I'm going to grab, a lot of people forget about these, is the opens. See the open of this candle? That's 53407, right? And then below that, I'm going to grab this next guy, right? So basically, what I'm doing in my mind right now is coming up with a very bearish scenario where if we hold below 538, I'm looking to target a move to this guy. We have to make the most probable decision, right? And what that is if price can't hold this level, it's going to go down to this level. If buyers can't hold this level, it's going to go down to this level. See, trading is all about identifying the highest probable decision. Not what you think is going to happen, but what has the highest probability of actually happening, right? So there's our downside targets. That's how we get them. All right, so now let's dive into the 15 and get more of an idea, right? So now this is what the market looked like post our pre-market, right? So this is where we hopped on live on the Discord and we started weighing out bullish and bearish scenarios, right? So now the way I'm doing this, once again, 538 is a very critical level, and until we get above that, I'm going to try to remain a little more bearish. But if we do get above it, I got upside targets of PDL, end of day, and then this probably would have been an upside target here, and then previous day high, right? So this is the thing. Notice how I'm using 538 market structure here to determine which way price is going to go, right? If buyers take this level, we could see PDL, we could see end of day, we could see 546. If sellers continue to hold this level, right, we could see 534, we could see 531, we can see 528, right? So now we're going to dive into the 5-minute. Right, so the market opens and we're live, we're being patient, and I'm now waiting. Well, now I have to identify my open print, right? So open print, that's our opening bell price, right? We got open print right here, right? This is the price that opens right at 9:30. I have to watch this level because it has tons of volume, right? Once again, it's a pint number. Where the volume is where large money is, and where large money is where our story is, and where our story is where our edge is, and where our edge is where our results are, right? So I have to identify open print, have to keep an eye on it. So a couple things I'm noticing here, right? We rip above open print. This is where the 2 minute's going to come in. So anybody trading in these times knows this market is extremely volatile, right? Entries are kind of hard because it's hard to determine risk, right? So for me to put on a trade, I don't want to risk more than an 80-cent move against me. I mean, this candle right here alone is $1.50. It's a 2-minute candle, right? So that pretty much means for me to enter a trade, I can't even risk this whole candle, right? So once again, as an intraday day trader trading 0-day SPX options, your entries have to be on point. What I mean by on point is I need to understand the story before getting in the market, okay? How do we do that? Watch open print. So you'll notice here, we're getting a classic bullish break and now a bullish retest off open print. This is bullish to me, but it's on the 2-minute time frame and we're below 538. Once again, I'm gonna always refer to my 1-hour time frame conditions, right? The structure, and I'm not going to trade against them. So this long play off open print is a no-go. I'm not taking it. I need more from buyers. And on that 5-minute, we were still fighting the 50 EMA. That's another strong reason to not trade against trend, right? So then what happens next? All the buyers that stepped in right here, right, which used to be me, I used to love long in this, are now starting to get stomped out. Sellers are starting to push price down. And now we fall below open print. We come up, we retest open print, and buyers cannot hold. This is my first sign that sellers are strong. They're much stronger than buyers. And we're coming off this 534.07 level. This was a critical level from the daily time frame. So now in my mind, I need to see weakness at this level. If I see weakness at this level, I'm looking for shorts targeting 532, right? It's literally a $2 move, and then we get another push down to that 529 level, right? So now, okay, now let's identify the entry, right? So now sellers are showing up at open print. Now I need to see weak buying. Boom, we snapped the low, right? This is low of day. We just snapped it. This is a great sign of weakness. Once again, I can't just enter the short because I can't determine my risk. This is where the GBI comes in, right? For anybody that doesn't know what the GBI is, it is a green bar ignored, right? So there's RBIs, right, which is a red bar ignored, and then there's a GBI, which is a green bar ignored. I'm looking for somewhere to put my risk. This is where those GBIs and RBIs come in. I need them, right? And also notice the EMA cloud, right? I need to see this hold. This is how I identify weakness from buyers or strength from sellers. So at this point, you can see we're ripping into the cloud. Now I have my green bar, right? Once I get my green bar here, let's see if I can do it like this. Now I have somewhere to determine my risk, right? So what I do is I whip out the rectangle and I go, okay, if this level breaks right here, I'm entering the market short. And I'm going to put my stop right here above the GBI, right? So this is my stop. This is my entry once we snap the bottom of it. Once we snap the bottom of that, I am in this trade short, right? In this scenario, I'm looking to capture a move based on buying weakness and selling strength. And once I see that, I'm entering the market short so I can keep my risk where I want it, right? So that's right where we entered the market short. Once we snap below this, stop above it, and literally caught here a $4 move in less than 10 minutes. This was a phenomenal trade. We had people on the Discord screaming. It was crazy. Check out the YouTube video. I posted it. It was absolutely phenomenal, right? But you see, guys, this is my approach, right? I use that 1-hour time frame, right? I use market structure, right? I use critical levels, my pint numbers, right? And I have to use the EMA clouds, right, to help determine risk. More importantly, those RBIs and GBIs, right? So guys, I hope you loved this lesson. It was a phenomenal lesson, right? And if you want to get involved with our team, you guys already know what to do. So in the meantime, in between time, keep killing it. I'll see you in the next lesson.